From the Wall Street Journal, home sales were the lowest in almost 30 years in 2023. High mortgage rates, prices made home buying prohibitively expensive for many last year. Home sales last year dropped to the lowest level in nearly 3 decades after elevated mortgage rates and lack of homes for sale shut out buyers. Existing home sales slid 19% in 2023 from the prior year to 4.09 million, the National Association of Realtors said Friday. The total was lower than during the subprime crisis and the lowest full-year level since 1995. But the housing market is showing some signs of life as mortgage rates ease, and it's possible that last year represented a bottom for sales activity. After 2 years of soaring home sales that started during the pandemic as people thought more space and new locations, the housing market skidded to a halt in mid-2022. Sales activity last year got off to a better than expected start when mortgage rates retreated and some buyers rushed to take advantage of easing borrowing costs. Then rates began to rise again and supply of homes for sale stalled at very low levels, keeping the market frozen. Supply was so tight in part because many homeowners with low mortgage rates chose to stay put last year, determining it would be too expensive to buy another house at a higher interest rate. That lack of inventory pushed home prices to record highs last year and made home purchase prohibitively expensive for many prospective buyers. Some economists say home buying activity is likely to pick up in 2024, with the Federal Reserve pivoting away from raising short-term interest rates and considering when to cut. Mortgage rates have started to decline. The 30-year fixed mortgage rate averaged 6.6% this week, the lowest level since May, according to Freddie Mac. Fannie Mae recently forecast that this rate will move below 6% by the end of the year. People who postponed purchases last year due to high rates may not be able to keep waiting. Millions of millennials are in the typical first-time home buying age range. There's so much latent demand in the market, said Sam Cater, chief economist at Freddie Mac. You have a lot of folks that are still trying to get up on the first rung of the housing ladder. Home shopping activity has started to tick up, real estate agents say, as buyers look to take advantage of the lower rates. Mortgage rates have dropped more than a percentage point since October when they rose to a 23-year high. Mortgage purchase applications rose in the week ended January 12th to the highest seasonally adjusted level since July, according to the Mortgage Bankers Association. If rates continue to fall, more homeowners who want to move but have feared paying a significantly higher mortgage rate on their next home may feel more comfortable listing their houses. Mortgage rates are meaningfully lower compared to just 2 months ago, and more inventory is expected to appear on the market in upcoming months. But the gap between the borrowing rate they have now and the rate they would pay on a new loan remains significant. This is likely to keep inventory lower than normal this year, economists say. The lack of supply is keeping prices high. At the current sales pace, there was a 3.2-month supply of homes in the market at the end of December. 4 to 6 months of supply is considered a balanced market. Quote, even for folks that could continue to afford at higher rates, this drop in available inventory prevented them from participating in the housing market. The last time existing home sales were this low, in 1995, mortgage rates were mostly higher, standing between 7 and 9.5%. The median existing home sales price in 1995 was $114,600, less than one-third of the December 2023 median price, according to the NAR. The U.S. population was also much smaller, about 266 million in 1995, compared with about 336 million today. Existing home sales, which make up most of the housing market, fell 1% in December from the prior month to a seasonally adjusted annual rate of 3.78 million. That's the lowest monthly rate since August 2010. December sales fell 6.2% from a year earlier. The national median existing home price rose 4.4% in December from a year earlier to $382,600, the NAR said. The decline in rates has also pushed up home builder confidence. Builders benefited in 2023 from the shortage of existing homes on the market. A measure of U.S. home builder confidence rose in January for the second consecutive month, the National Association of Home Builders said this week. Housing starts, a measure of U.S. home building, fell 9% in 2023 from the prior year to 1.41 million, the Commerce Department said. Quick commentary here. A lot of this is being driven by the factor of interest rates. Higher interest rates make it not just more expensive to buy a home, but makes it more likely for somebody with a low fixed rate to sell their house and buy a house with a higher rate. In addition to also driving this market is some strong demand as the population has grown, and we have a generation of the millennials in particular looking to buy houses. There is fairly strong demand for housing, but not a large supply of it. This should be good for home builders in those areas where there is available land to develop and build out. For those markets without available land to build out, we have this challenge of existing owners not wanting to sell at prices that new owners can afford.